And things got off to a horrible start. August, however, will be remembered as yet another monumental display of faith by Wall Street in its capacity to predict future events. And this comes 4 weeks after the greatest volatility meltdown since the pandemic. Levels of conviction are soaring across assets in the 12 months leading up to the first interest rate cut in the easing cycle. The S&P 500 has never soared as much as it did in August, up 25%. The current consensus is still fragile, as seen by the early August turmoil. For a brief while, Wall Street's fear gauge was sent tumbling due to a single government report. US job data for July. Fortunately, markets have now stabilized, but investors will eye the August jobs report due in a few days. Stocks climbed in the final stretch of a wild August, with traders bracing for what's historically known as the worst month for equities. For all the whiplash in global markets just a few weeks ago, the S&P 500 closed within a whisker of its all-time highs. Stocks spiked in the last 10 minutes of Wall Street trading, with the S&P 500 up 1% and all of its major groups on the rise. The gauge notched its 4th straight monthly gain. In Asia, Japan's Nikkei posted its widest monthly trading range since 1990. This comes after the Bank of Japan's rate hike and signs of a US slowdown triggered wild price swings earlier in August. The gap between the Nikkei's intraday high and low during this month increased to 7,625 yen after the gauge tumbled as much as 13% on August 5th in a broad sell-off. That's the biggest difference since August 1990, when the stock market was in the midst of a sharp downturn after the bubble economy burst. September, though, will likely be more supportive for markets as the Fed embarks on its rate cut path. For latest news, download the WION app and subscribe to our YouTube channel.